Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Yeah, that happened today. So we very briefly hit bear market territory. So in this video, we need to talk about what is a bear market, what does it mean, and what you should do now that we have officially touched it. Now, we did not end in a bear market because the market came right back up just a little bit, but we're pretty much in bear market territory. All right, so what is a bear market? A bear market is when the stock market drops 20% from its all-time high. The last time the stock market was high was like, I don't know, December or November. It feels like forever ago where the market was up and consistently up. I think last year we hit was 69 or 70 all-time highs in 2021. Them days is over. Okay, so we're in a bear market. People are upset. Understandably, people are a little panicky and trying to figure out what do I need to do. So let's walk through a lot of this. So number one, I think one of your best moves, if you hold quality stocks. Quality stocks means your company makes money, they're consistently growing, and you have no fear of them going out of business. Now, I have a decent, healthy fear of GameStop going out of business. Okay, I just do. We can dig into why, but I don't think, whether it's now, next 5 years or 10 years, I don't think Target or Walmart or Apple, I don't think any of those are going out of business. I think they're going to be fine. And I think you would probably agree that those three are likely to be here in the next 10 years than a GameStop, okay? Now, I'm not going to get in that argument, but it is what it is, okay? So that's number one. So if you hold quality companies, you know they're going to be in business. They're making money. They've been through rough times. They survived 2008. They survived 2020, and they survived decades before. I think you're probably going to be fine, and I would consider investing more. That's what I did today. Like I do all the time anyway. I consistently invest my money over time. And in a bear market situation, just like it was in 2008, just like it was in 2020, just like it was in, I think, 2011 and 2001, 2002, and then even going back to 2000, these are all bear markets, by the way, when the market was down. All of those situations were quite profitable over time. Keyword was over time. So the problem here is that we as people, just as humans, the way we're wired, it's hard to think that what I'm doing right now in 2022 is going to benefit me in 2027. And that holding on to a company that feels terrible right now is actually going to be a benefit in 2027, right? And that, could I hold on for that long? Because between now and then, I don't know where I'm going to be, right? I don't know what life is going to look like, but that is the key, right? That is how wealth is created. When I started investing myself with my own dollars seriously, when I got my first job out of college in 2012, it was hard for me to fathom that I would have hundreds of thousands of dollars in the market. It was hard for me to fathom that I would actually like write books and be here in front of y'all. Right? When I first started this, I didn't think 10 years, I hoped where I would, I was like 10 years from my college graduation, I would be doing X, Y, and Z. And you turn around and say, wow, I actually did those things, right? But it's because you started at that point in time. So with the stocks that you have, even though it may be painful right now, you have to start considering those things, especially in a bear market, because it could take time to recover, okay? But the other thing is this, you might not have been wrong. And I think that's the really, really, really important part right now. For example, we know that in recessions, assuming we even hit a recession that is not official yet, all economists have not agreed that we are going to hit a recession in 2022. But in recessions, and usually in bear markets, in times of inflation, there are certain types of companies that do well, even though they haven't done well yet. And you might not have been wrong. Walmart is a solid financial company, like solid financially, right? Costco, Dollar General, even Target. Target was down 25% the other day. If you hold Target like I do, we might not have been wrong in that if we continue this route and Target actually has to raise prices, people are still going to be shopping at Target. We found out from their reports that their traffic is still coming in. People are still going to Target. They're just buying some items over others. Okay, and fuel costs for Target are higher. Same thing with Amazon. Same thing with Walmart. So we might not have been wrong. It was a solid business. They got more people coming in than they did before, but the stock is down. And that might not be a time to sell. It could signal, look, instead of, I think I'm going to make money in the next year, I think I'm going to make money in the next 6 months, you might have to zoom out and say, look, I'm going to pull out and say it might be 3 years, it might be 5 years, but I think it might be worth it. And even the funniest thing about this too, I just Googled this for fun. But if you pull up a list, this is the first search result, and this is the article was written like 4 days ago, but this is my first search result today. If you sit here and Google what are the best stocks for recession, Target actually shows up, as well as Walmart, as well as Home Depot. And if Home Depot's on there, I'm sure Lowe's is on this list too. And these are stocks we've been talking about for a while now. So we were talking about it. Some of y'all invest in it. I invest in it. We might not have been wrong, but the stocks, or the stock market rather, just hadn't caught up to you yet. And that happens. That definitely happens. We've talked about Apple. Apple actually made more money in this season. But the stock market said, nah, I don't like you. So you're still down, right? Microsoft, which is really, really interesting right now because Microsoft is actually hiring more people and increasing people's pay when all this chaos is happening and people at Netflix are getting laid off, unfortunately. And Microsoft is saying, look, we believe in our quality employees, and while everybody's shifting around doing all this stuff, we are going to get better people and continue to keep people here because we realize the value of those people and how they help us with our business. And it also signals that if you are hiring more and paying people more, that says that you think that your future is bright, even though the stock is down double digits. You might not be wrong. That is a thing that does happen. The market is not up every single year. And there are times like this where it's like, it sucks, the market's going down, but in honesty, when everything is down, it's a little harder to tell who is right and who is wrong. Now, if I invested in something, the market is up and my stock is down, it's like, hey, you messed up, right? But in cases like this, it could be, hey, the whole market is down, and that is what it is. I mean, I have many choices. If I'm still looking to have something that consumer space, we showed that heat map the other day. You don't have many choices because everything is down in that sector except for what was it, Dollar Tree or whatever it was that day, TJ Maxx, I think, whatever it was, and that may be different today too. So you might not be wrong, it's okay, but you want to focus on the long term. Now I always say, and I always try to make this distinction, is I reevaluate my portfolio every 6 months. I don't necessarily sell everything every 6 months. I'm not sure up to this point what's going to stay and what's going to go, right? Because Target is one that is down the most at like 30 some odd percent. But hey, it tends to do well in recession. It tends to do well in the market. Did fine in 2020, did fine in 2008. In fact, it outperformed the overall stock market in those years. And even though higher gas prices are hurting Target, even though inflation is hurting Target, those things are not permanent. Now, I'm not trying to sell you on Target because I like Walmart and I like Costco and I like Dollar General and I like Dollar Tree. I like a lot of those companies that are in that sector. So we'll see, right? We will see. But the thing is, urge patience and don't take this upon yourself to feel like I'm a terrible investor because you may own something that is good. Like Apple is a good company. It's down. Okay, if Apple is down and Microsoft is down and Google is down and all the other good companies with the exception of everything in energy is down, that's not on you. That is not on you, but it might be on you to decide what happens next. It might be on you to say, look, I'm going to continue to hold as opposed to panic. So that is how you want to view things. I know it's not easy. I know it's not fun. I know it's not clean, right? A lot of times I know as a former math teacher, you would love when you sit there and you do a problem that comes out as a nice, even, clean number, no fractions, no decimal points, just nice. That's not how reality works. That's not how reality works. And right now it seems like a fraction because everybody's stuff's getting cut in half, right? So in this case, or in this scenario, just stay focused. If you have index funds, that's absolutely the easiest thing for you to do because it owns everything anyway. That's something that you can just easily just buy blind, in my opinion, which is what I do in my 401k. I even bought more of my index funds on public. So if y'all saw that, you saw that, right? We practice what we preach here. And we'll see about everything else. So as we get closer to June, I will continue to espouse my thoughts about what I'm going to keep and what I'm going to get into. But right now, the more I read, the more I see how the market is moving, I'm not entirely sure that we were totally wrong, right? Like maybe Amazon I can get rid of, maybe, but we'll talk about that when we get there. Target is down, is not fun, but I might not have been wrong there either because again, the entire sector is wrong now. Could I have made more money with Walmart? Probably so, right? So if anything, I could have switched over, but you know, you got the information that you have at the time, but again, don't take it on yourself and say, oh, I'm a terrible investor, everything is rigged and it's bad. And it's like, no, the whole market is down, we got to adjust. But the key thing is the situation permanent? And I think that is the key question that you want to ask here. Gas prices, are they always going to stay this high forevermore? Probably not. Is inflation going to be here and stay forevermore? Probably not, because we're raising interest rates, and those are eventually, I don't know how long, but those are eventually going to taper off. That's going to help a lot of companies. It's going to help a lot of people, most importantly. So these are the questions you want to ask. That's the scenario that you want to look at. And again, go back to 2008. Go look at any chart, any graph of what happened in the stock market in 2008 and watch how the market fell, and then see what happened after that. It's not a guarantee that the market's going to do the exact same it did in 2008 or 2020 or any time the stock market was down. Okay, it's not a guarantee, but we do know that more times than not, the market is up. And we also know that more times than not, when the market is down and you continuously invest, those are the people who have the most money and see the highest returns. That we know. Okay, so you got a choice now. You want to run and be afraid and just quit everything? Or do you want to say, look, this is the calm, or this is the storm, right? this is the bad part of the movie, but it makes the ending better, right? It's going to make me better off by investing today over the next 5 years. And I'll leave you with this. When I started investing for real, like when I had an actual job 10 years ago. So I finished college 10 years ago, which is crazy to think about. But for me, it's crazy to think about. But anyway, when I finished, I started my career as a teacher. I was making $45,000 a year. Now all I could do was invest $100 a month. That's all I had. And when I graduated college, and maybe some of y'all are watching this, and you maybe graduated this year, what have you, the question was like, where are you going to be in 10 years? What are you going to look like? What is your life going to be 10 years from now? And at the time, I was like, bro, I'm a teacher. I got $100 a month. That's all I got. And we were coming off of, just 4 years prior to that was a Great Recession. So, it wasn't all rainbows and sunshines at that point in time. But I wanted to be, obviously everybody does, but I wanted to be wealthy. I didn't know what that was going to look like. I didn't know what owning a home was going to look like, or even having a YouTube channel, right? I didn't know what writing best-selling books were going to be like. I hadn't done all those things yet. But the investments that I made in 2012 is what set me up for where I am in 2022. And not just the financial investments, it was also the personal investments, the books I read, the things I did, the experiences that I had, that set me up for where I am today. It was a 10-year thing to get to that first 100,000, the next 100,000. It was that first book that I read to write my first book, right? It was the first book that set up this one, and this one set up some opportunity with Forbes, right? And on New York Times, all this kind of stuff. So it's like right now, when things are unclear, I was unclear sitting there getting that first degree. How am I pay this off? Right now, I only got like $2,000 left of that. So again, what you are doing now is going to set you up for the future. It's not always fun, it's not always clear, but when I tell you that if you are owning quality companies, you are owning index funds, over time, you're going to be fine. But the key word is over time. It's not going to happen overnight. I can't tell you how long this is going to last. I can't tell you when this is going to recover, but I can tell you that I don't think Apple is going out of business. I don't think the S&P 500 as a whole, I don't think they're going out of business. And until that changes, investing on a regular schedule makes the most sense. All right, that is it for me. I will see most of you on Monday, because we do videos Monday through Friday if you're new. But I want to get those exclusive videos. Amazon, Palantir, and there are a few others that y'all wanted me to do kind of like exclusive deep dives on. So I will let y'all know when that stuff is available, when I'm done recording it this weekend. So I'm gonna get to work on those. Y'all wanted me to do some videos, so I'm gonna do some videos. All right, so for those who for those who don't know, we want to try and do, I don't know if it's going to be once a week or twice a month, whatever it's going to be, kind of like exclusive, like membership, I don't know, $2, $5 a month, something small, and do like those deep dive breakdowns, 15, 20 minutes, my thoughts and opinions on certain companies that y'all request. So y'all asked for it, so I'm going to give it to you. So I'll be doing some recording, some research this weekend, and then for everybody else, I will see y'all on Monday. All right, that's it for me. Talk to y'all later. Bye.